Hello, good evening.
Good evening, sir.
All right. Our PM class tonight, we shall be looking at the second topic. Please let us mute our speaker. As a standard, when you get to this class, please check your speaker and mute. It's not impossible that your speaker is on. You are not even aware, but please, as much as possible. I can see Fumilola's speaker is on. Please, can you mute? Because that can create external interference with our lecture. All right, our class tonight, we are looking at the second topic, cost estimation. We shall be discussing what is cost estimation, method of cost estimation, what is the purpose of estimating cost, and application of cost estimating techniques. All right, let's introduce the topic. Please, like I said, if you are joining the class, please mute. Check your speaker and mute. If Chinel guys on, let's get this muted. All right, we move to the topic. Cost estimation. Cost estimation can be defined as the estimation or as the measure of historical cost with a view to being a prediction of likely future costs. We said cost estimation. This can be defined or this can be described as the measurement of historical cost. What is historical cost? Cost incurred in the past cost. Estimation is the measurement of historical cost with a view being in prediction of likely future costs.
Just like my family,
For management control, planning, and decision making. In other words, we are trying to measure historical costs. We are trying to measure historical costs.
Con vuela lo y la fatan tu mami fela tu bloqueo la
So
tanto.
to assist us
Vaya con la wala.
estimating
Claro, es muy simple, claro,
the likely future cost.
Hello, sir. Gloria, please mute your mic. You are affecting us now.
Don't worry. Oh, I'll require password. Please hold. Let me get password and click assume the hosting rights. Please just hold on. Once I get the password, I'm going to take the host rights and I should be able to mute or remove any students. I will say, you are trying to estimate future costs by measuring past costs. You are trying to estimate what the cost will be in the future. Cost estimation. We see the measurement of historical costs with a view to helping prediction of likely future costs. For example, before commencement of this diet, November diet,
I mean, after the decay from the Broadway, the last thing that should be dealing with is a trunk of any kind.
before the commencement of this November diet, yes, the network is a bit fluctuating. But as much as possible, I want us to understand one thing. I saw some all right, I can mute now because some students are not even aware that the speaker is on. Yes, I'm about to make comment on this. Now, please hold on. Yes, my network is fluctuating. I've seen that comments from the chats. It is very possible that occasionally the network will fluctuate. Just as it can happen to the lecturer, it can equally happen to you as a student. Let me repeat my point. The issue of network connectivity is not within the lecturer control. What we can do is to try and log out and re-log on to the system. If at any point some of these comments, you should realize it is not the making of the lecturer to say, I don't want to connect. Some of us, we have like 3 devices. Network is, so please, as much as possible, we are going to give you let's continue with the class. Just 1 minute. Just now, I have the network taking me out, but I'm back. Yes, David.
What's the solution?
I have to mute some students because I don't know if it is a problem for this Taiwo to mute. Now let's go on to the business. We said cost estimation is the measurement of historical costs with a view to helping in the prediction of likely future costs for management control, planning, and decision making. I was trying to give an illustration to this to enhance understanding. Before the commencement of this November diet, the management of equity professionals met to discuss the plan for November diet. One of our planning is that we need to make preparation for November diet. We need to prepare for November diet. As at that point in time, we have not commenced this diet. Now, management said we have to prepare student study pack. We need to print study pack for the students. And we are trying to determine how much should we budget for student study pack. How much should we estimate for the printing of student study pack? We now fall back to the cost incurred at the previous diet. We now refer back to our costing system. We now check how much do we spend last year for the printing of student study pack. We are looking at our past costs. We are the amounts incurred last diet for the printing of student study pack. Why are we doing this? We are measuring historical cost with a view to assisting us in estimate and spend 5 million for the printing of student study pack class diets. We now say, okay, we need to make provision for at least 5 diets, 5 million or above 5 million, so that we can print student study pack. Look at it. We are measuring past costs. We are measuring historical costs with a view to assisting the management to estimate likely future costs. Why are we doing this? You want to be able to estimate the amount we are going to spend in November diets for the printing of student study pack. This is being done to assist management planning. Company must plan ahead to assist cost control and to assist management decision making. So we have defined what is cost estimation. I'm trying to mute Simias. I don't know why. The purpose of cost estimation is to assist management decision making, planning, and cost control. The next paragraph. An understanding of cost behavior is a prerequisite for cost estimation. Let me explain that sentence. Of cost behavior is a prerequisite for cost estimation. The meaning of this sentence is that you need to understand cost behavior for you to be able to estimate cost. Let me repeat that point. To estimate cost, you require the knowledge of cost behavior. What is cost behavior? Cost behavior can be defined as the manner or way in which costs respond to changes in production volume. You can define cost behavior as the manner or way in which cost responds to changes in the volume of production or sales. There are 3 types of cost behavior. You can have variable cost. 1, variable cost, fixed cost, and mixed cost. There are 3 types of cost behavior. You can have variable cost. What is variable cost? Or what are variable costs? These are costs that vary in direct proportion with the volume of production.
Variable cost. So, but the cost
Variable
like
cost.
this,
Let me repeat that. We said variable costs. Variable costs are costs that vary in direct proportion with the volume of production. The more we produce, the more total variable costs incur. Polite, please, can you be polite enough? The more we produce, the more the total variable cost incurred. Please note that word. Ayodeji, please mute. Thank you. Please note my words. The higher the production volume, the higher the total variable cost. Variable cost per unit will be constant, but total variable cost will rise in line with the volume of production. I'm trying to emphasize this point. Note the difference between total variable cost and variable cost per unit. Examples of variable costs are direct material costs. Look at material costs. The more we produce a product, the more raw materials we are going to use. As you produce more products, the more raw material you are going to consume in production. That means as production volume increases, material cost, total material cost will also increase. In that case, material cost is a variable cost. But please note, material cost per unit will be constant. For example, if you purchase a bottle of Coke, a bottle of Coke currently sells for 500 naira or 400 naira. If you purchase one bottle of Coke, you pay 500 naira. If you purchase two bottles, it becomes 1,000. If you purchase three bottles, it becomes 1,500. The more bottles of Coke you buy, the more cost will increase. But cost per one will be constant. The cost per one is 500 naira per one. So please note, because some students cannot differentiate between total variable cost and variable cost per unit. All right. We have fixed costs. Fixed costs, these are costs that remain fixed in total, regardless of the volume of production. Fixed costs, these are costs that remain fixed in total, regardless of the volume of production or sales. A good example of fixed cost is factory rents or business rents. If you look at rental cost, Ogechi, please mute. If you look at rental cost is fixed. If you like, produce 1 or produce 10. Your rental cost is fixed for the year. I'm trying to mute. This is the risk with online class. Okay, please, can you mute? If you pay rent for a factory, if you like, don't produce. You have paid the rent. If you like, produce 100,000. Your rental cost is fixed. This cost does not vary with the volume of production. Number 3, we have mixed cost. Mixed costs are costs that are partly variable and partly fixed. Mixed costs are costs that are partly variable and partly fixed. So for you to estimate cost, you must understand whether the cost is variable or fixed or mixed cost. All right. Our next discussion. What are the methods of estimating cost? What are the techniques that we can use to estimate cost? Basically, there are 5 methods of estimating cost. Basically, there are 5 methods of estimating cost. We have the engineering method, the analysis method, scatter diagrams, the high and low method, and we have the linear regression analysis method. The first 3 methods are purely theoretical. The first 3 methods, as far as this exam is concerned, are largely theoretical. We shall come back to it because you must address this exam with smartness. What am I trying to say? We must not major in minor. The time frame is very short. So I'm going to go to the last 2. Of course, we shall come back to the first 3, but let's go to the last 2 because this is where calculation we apply. You have the high and low method. This method uses the 2 extreme data points to determine the value of A, in brackets, the fixed cost portion, and value of B, in brackets, the variable rate, in the equation y is equal to A plus BS. Let me explain this. The high and low method uses the 2 extreme data points to calculate value of the fixed cost and value of the variable rate per unit. In the equation, this equation is the cost equation. Y is equal to A plus BS. Your cost equation is defined as the letter Y represent the total cost. The small letter A represent the total fixed cost. The small letter B represent the variable cost per unit or the variable rate per unit. Your letter X represents volume of production. Recall our discussion. We said for you to be able to estimate cost, you must know variable cost, you must know fixed cost, and you must know mixed cost. So this equation, I can use my letter A. It represents total fixed cost. My letter B represents variable cost per unit. Why my letter Y represents total cost? Total cost is the mixed cost. The total cost includes the addition of fixed cost and variable cost. The total cost is your mixed cost. It is partly variable and partly fixed. If you look at the total cost of a company, it is the addition of the variable cost and the fixed cost. That means the total cost of a company is a mixed cost. It contains elements of variable and fixed cost. All right. What are the conditions for high and low? 3 conditions must be in place for you to use high and low method to estimate cost. Need just 1 minute. Let's go on. I only try to take water. 3 conditions must be in place before you can use high and low method to estimate cost. Condition number 1, there must be activities at the highest level and the lowest level. You must have activity at the highest level and activity at the lowest level. What do we refer to as activity? Production activity, or it could be sales activity. So you must have production at the highest level, and you must have production at the lowest level. Condition number 2, the variable cost per unit, per one, must be constant at all levels. Then condition number 3, the total fixed cost must be the same at all levels. At all levels. These 3 conditions must be in place so you can talk of high and low method. Now, steps involved for high and low method. The steps involved when using high and low method to estimate cost. What are the steps? 1, select the highest output level and the corresponding cost. Step 1 says, select the highest output level and the corresponding cost. Note in bracket, this may not necessarily be the highest cost. The corresponding cost might not be the highest cost. So you are going to select the highest output level and the corresponding cost. Step number 2, select the lowest activity level, the output level, and the corresponding cost. Also note, the corresponding cost may not necessarily be the lowest cost. Step 3, calculate the variable rates. The variable rate per unit is calculated as differences in cost divided by differences in activity level. That is differences in output level. Thereafter, use the variable rate per unit to calculate the total variable cost. Thereafter, use the variable rate per unit to calculate the total variable cost. Your total variable cost is calculated as number of output units multiplied by the variable rate per unit. Step number 4, calculate the total cost, total fixed cost portion. The total fixed cost is calculated as the total cost minus the total variable cost. Your total fixed cost is equal to the total cost minus the total variable cost. Once you are able to get the variable cost, the fixed cost, then you can estimate your cost. You can estimate future costs. Note, where inflation makes the cost in each period impossible to compare, cost should be adjusted to the same price level by a means of price level index. Let me explain that. Where there's inflation in the question, you have inflation in year 1, inflation in year 2, inflation in year 3, and the inflation is not the same. That means we cannot compare the cost. That inflation will make cost comparison difficult for us. We now need to reduce all the costs to the same price level, to the same inflation level. You can do this by using price level index. That is the explanation regarding the high and low method. One major limitation with this method is that it considers only two data points, two extreme data points, the highest level and the lowest level. It looks at the highest production level and the lowest production level in estimating cost. It ignores other levels. Next, we have the regression analysis method. This method can also be used to estimate cost. It is otherwise known as the least square techniques. The least square technique. This method is a statistical method. The regression analysis method is a statistical method of estimating costs using historical data from a number of previous accounting periods. We said regression analysis method is a statistical method of estimating costs using historical costs, historical data from a number of previous accounting periods. The method regresses Y. The regression of Y variable on X variable. Your Y variable is the dependent variable, while your X variable is the independent variable. For example, you can look at the effect of advertisement on sales. Does advertisement expenditure affect sales volume? In this case, you are trying to ask, is sales volume dependent on advertisement? You ask the question, is sales volume dependent on advertisement expenditure? In this case, your sales volume represents your Y. While the advertisement expenditure will represent your letter X. You are trying to regress sales volume on advertisement cost. Recall we said this method uses statistical analysis, statistical method to estimate costs. If you are trying to estimate the variable costs, the variable cost per unit, recall this equation is Y is total cost, small letter A is your fixed cost. The small letter B is your variable cost per unit. And your letter X is your volume. of production or the activity level. If you are to calculate variable cost per unit, you use this equation, this formula. B is equal to N summation XY minus summation X summation Y divided by N summation X square minus summation X into bracket square. You can use this formula to calculate your letter B. Your letter B represents the variable cost per unit, calculated as summation of Y divided by N minus B summation of N X divided by N. Your X, your Y is your total cost. Your X is your volume. So you are trying to ask, is total cost dependent on the volume of production? Look at the question. You are trying to regress Y on X. You can ask yourself, is the total cost of this company dependent on the volume of production? In this case, total cost is our Y variable. Y volume of production is our X variable. Then lastly, conditions for the use of linear regression in estimating cost. Condition 1, there should be an underlying linear relationship between the two variables. There should be an underlying linear relationship between the two variables. What does that mean? It means that if, how do I put it now? Yes, the variable cost per unit must be the same. If you say cost is variable cost, that cost the same, yes. That means there's a linear relationship now. Number 2 is that the historical cost data should be adjusted to a common price level where there's inflation. And we have explained this before. If there's inflation in the question affecting the cost.
Please, sir, come again on the condition 1, sir. I'm so sorry.
No problem. We said there should be underlying linear relationship between the two variables. And also let me explain. you have variable 1 and 2, X and Y. X is the volume. Y is the cost. Your variable cost per unit must be the same. If you produce 1 unit for 10 naira or 100 naira, that means if you produce 2, it must give you 200 naira. If you produce 3, it must give you 300 naira. If you produce 10,000, it must give you 100,000 or 1 million naira. 10,000 multiplied by 100 naira. That means there's linear relationship. The variable cost per unit must be the same. Total variable cost will increase, so but cost per one will be constant. Is that clear, please?
Yes, sir. Thank you, sir.
Condition 2. Historical cost data should be adjusted to a common price level to eliminate the effect of inflation. If you are trying to estimate cost, you are trying to estimate future cost. Excuse me. And you observe that there's inflation in the question between one period and the next period. And this inflation is not the same. Then you must adjust the inflation out. Number 3, as far as possible, historical cost should be accurately recorded so that variable costs are properly matched against item produced. Variable cost relates to the items produced. As far as possible, our historical cost should be accurately recorded so that the variable costs are properly matched against the items produced or sold, and fixed costs are properly matched against the time period to which they relate. Variable cost has to do with production volume. Recall, we said variable costs that vary in the same proportion with volume of production. Why fixed costs? These are costs that remain fixed in total, regardless of the volume. Fixed cost is not related to volume. Fixed cost is related to time. You pay your annual rent maybe every January or December. Your landlord will only increase your rent maybe after 2 years or 3 years. So fixed cost has to do with time period. So you must ensure that your variable cost is matched or are matched with items produced, and fixed costs are matched against the time period to which they relate. That means if you pay rent for 2024 then you are going to record that rent in 2024 because that rent relates to 2024. The rent for 2025 will be recorded against 2025, period. Condition 5. Management should either be confident that conditions that existed in the past will continue to the future. We are saying that management should be confident that the conditions that happened in the past will continue into the future. Where the conditions that happens in the past will not continue to the future. That means we envisage changes in conditions. Then we must adjust our costs to accommodate expected future changes. Remember, we are using historical costs incurred in the past to estimate future costs. For you to use historical costs to estimate future costs, then you must be confident that the conditions that happen in the past will continue to the future. If some of these conditions will change, then the changes must be incorporated into your cost estimate. Lastly is that the amount of data available is very important for forecasting. You know, when you are trying to forecast, the size of the data, the larger the size of your data, the smaller your error. With any forecasting process, the amount of data is very important. All right. Any question, please?
Sir, please, I have questions.
Why not? Olukemi.
Yes, sir.
Oluwaseun.
Yes, sir.
What are your questions, Fa?
Number one, sir. Can we say cost estimation or cost ascertainment? We can use the two words at the same time. Are they the same thing? Cost estimation and cost ascertainment.
Can we say what?
Cost estimation is the same thing as cost ascertainment.
No.
Okay.
Cost estimation is not the same as cost ascertainment under costing.
Okay.
It's not the same.
Okay. So the process of estimating cost, sir, can we say that's that process? Can we call it costing, as in definition of costing? That process of estimating cost, the process of evaluating the historical cost, with a view to predict so future cost. Can we say that process is? Can we call that process costing?
And we call it costing.
Yes.
No, please.
Okay.
First, let me answer the first one. What is cost ascertainment? Cost ascertainment is to determine the cost or to ascertain the cost of an item or service. When you get to, we have what we call cost allocation, cost apportionment. We have what we call cost absorption process. Ascertainment of cost. You want to determine the total cost of these products. That is cost ascertainment, or the total cost of this service. But cost estimation is you are trying to predict what will be the future cost. Cost ascertainment, you have incurred the cost. Cost estimation, we have not incurred the cost. Is it better, please?
Yes, sir. Yes, sir.
Now, you now talk about costing or cost accounting. Cost accounting is a branch of accounting that deals with the ascertainment of cost, measurement of cost, analyzing cost, evaluating cost, recording cost, with a view to provide information to management so as to aid planning, controlling, and decision making. Cost ascertainment, cost estimation, they are components of costing. I hope it's better.
Thank you, sir. Then the second question, sir. We said fees cost, regardless the level of activities remain the same. What can't we have something like set fixed cost if it's not within the same range? We said fees cost remain the same regardless of the level of activities. What of step fixed cost?
See, you are going to another thing again now. You understand?
I'm so sorry, sir.
No, it's okay. What is coming in there? Maybe what you have learned in your foundation.
Yes, sir.
I know. I led your foundation now. I've led your foundation before. I know. What is step fixed cost? Why is it different from fixed cost? Why are we not particular about step fixed cost here? First is, we said total fixed cost. Costs that remain fixed in total, regardless of the volume of production. We now also say there's also a clause that says the total fixed cost will remain fixed within a given activity range. Total fixed cost will remain fixed within a given activity range. If the activity range is exceeded, then the fixed cost can step up. but it's still a fixed cost. It's not a missed cost. Let me explain that briefly. This Zoom class we have paid for 100 participants. We can only accommodate 100 students. The amount we pay is fixed. Whether you have 1 student or you have 10 students, the amount we pay is fixed, provided the student is within 100. If number of students is now 101, only 100 students or 100 participants can log on to this system. That means one person will not be able to log on. To accommodate that student, that particular student will force our Zoom course now, because we now need to go and increase the number now. Once we increase the number now, our cost now, we step up. What is making that cost to step up is because the activity range has been exceeded. So that is defined with a clause, but that will not disturb your cost estimation. I hope it's better.
Thank you, sir. My last question, sir. When we say activity levels, does that only mean production level or sales volume? I mean production volume and sales volume.
Usually, it will refer to production or sales. But again, the question can change. You can have labor hour. If you are trying to look at
recording in progress.
If you are trying to look at the impact of labor hour on cost, labor hours and total cost. In that case, your labor hours become the activity level. So at times it could change. That's why we call it activity level. What is the activity we are particular about? Is it production? Is it sales volume? Is it labor hour? Is it machine hour? Or what have you? The question will tell you the activity. Whatever activity the question gives you becomes the activity level. Is that better, Kenny?
Thank you, sir.
I'm sure you have answered the question for everybody.
No, sir. Good evening, sir.
Tim.
Yes, sir. Good evening, sir.
Yes, sir.
Please, this is my first time in the class. I don't know the material. Have you shared it with everybody in the class? And the other question is that this condition for the use of linear regression in estimating costs, when you are trying to explain it, I was thinking that you like put something down to explain that is it number one? The lady asked that he didn't understand that number one the other time. So I was thinking that you just write maybe the explanation, something like that will make somebody to just quickly get it. I don't know if you understand my question, sir.
The first point is you are just joining the class this evening.
Yes, sir.
Understandable.
Okay, sir.
The material has been shared with the class.
Okay, sir.
So maybe after this lecture, somebody will reshare with the group. Anybody can reshare with the group. Anybody, please, you can help us reshare. Now, the second question is, we should demonstrate it.
Yes, especially this number 1 and number 2.
But that is the simplest self.
Okay, sir.
We are going to demonstrate with calculation.
Oh,
And that is actually the simplest. You know why? We said linear relationship. If you purchase 1 bottle of Coke for 500 naira, if you purchase 2, that will be how much? You cannot mute.
okay, sir.
Dean, you cannot mute.
That's one.
Okay.
That's 1,000.
It just okay. I want the guy to answer. If you purchase a bottle of Coke for 500 naira,
Yes,
if you
sir.
purchase 2, become how much?
That's 1,000 naira.
3 becomes how much?
That's 1,500.
Look at it. That 500 naira is constant. Is that not?
Yes.
That is linear now. The more you buy, that relationship is linear relationship.
Okay.
If you purchase 5, that's 2,500.
That's
As you buy more, your cost will increase at a constant rate. Is it better, please?
Yes, sir.
That is what we refer to as linear relationship. It means that there's nothing like giving you discounts. You can't say because you are purchasing 100 bottles of Coke, let me give you discount. No. I hope it's better. We are still going to demonstrate it. We are still going to demonstrate it with question. Let's go to question. Please, I request, please, can somebody help me read this question? This question is available in your study pack. Please check page 77/78 on your study pack. And please, somebody help us reshare the study pack so that students just joining tonight can also benefit. Please go and check page 77/78. Question number 2. Ekwakete Industries Limited. Please, any volunteer, let me read this question.
Ekwakete EA Industries Limited operate 2 factories, one in Apapa and the other in Ikeja. The factory at Apapa is producing output in excess of sales demand, and it will be necessary to reduce output in the next period from the current 90% level. So
just 1 minute. I'm trying to expand it.
Oh, okay.
Okay, you can go ahead.
And it will be necessary to reduce output in the next period from the current 90% level of activities, which is 11,700 units, to 75%. The factory.
Thank you. Please hold on. Let me explain that. Please hold on. it will be necessary to reduce output. Examiner says it's necessary to reduce output in the next period from the current 90% level of activity, in brackets, 11,700 units to 75. That means currently, Apapa is operating at 90% level.
Yes.
I want to reduce it to 75 next period. You can continue. Tim.
Okay, sir. 75. The factory at Ikeja is also currently working at 90% level of activity, which is 8,100 units of a different product. But due to heavy sales demand, it is intended to increase output to 115%. Sorry, I'm reading from the screen. I don't have the question on my phone. Okay, thank you. You are given the follow. Okay. Okay, you are given the following information about costs. The Apapa factory as stated, and the Ikeja factory. Do you want me to?
Okay.
So at
No, don't worry.
okay.
I will explain. Don't worry.
Okay, sir. I should continue.
If you look at this, Apapa factory, you have 80% level, 90% level, and 100% level. You have material, direct material cost, direct labor cost, and production overhead. We have the sales value. Ikeja factory, you have 80% level, 90%, 100%, 105, and 110. You are giving material cost, labor cost, production overhead. Then the sales value. Requirements. Produce a statement to show the expected marginal cost, contribution, and profits for each factory at the proposed level of activity. Let's deal with part A. Part B says, briefly explain a brief explanation of why your approach to estimating costs should differ for each factory. If I'm to summarize this question, we have a company with two factories, one in Ikeja. The factory at Apapa is currently operating at 90% level of activity, which is equal to 11,700 units of a product. And the company is planning to reduce from 90% to 75% in the next period. Ikeja factory is also currently operating at 90% level, which is equal to 8,100 of another product. Due to heavy sales demand, the company is planning to increase the level to 115% in the next financial period. That means future period. Now the question says, produce a statement to show the expected marginal cost, contribution, and profit for each factory. That means you are going to produce a statement for Apapa factory, showing the marginal cost, contribution, and profits at the proposed level of 75%. When you are done with that, you now move to Ikeja. You are going to produce a statement of expected marginal cost, contribution, and profits at the proposed level of 115%. Just 1 minute. All right, let's continue. Before we go to this statement preparation, let us ask ourselves, what is marginal cost? What is contribution? What is profits? What is marginal cost? Without wasting time, marginal cost can be defined from two perspectives. You can define your marginal cost from two viewpoints. From the viewpoint of the accountant, marginal cost is the addition of all the variable costs. From accountant's viewpoint, marginal cost is the summation of all variable costs. If you are looking at it from the viewpoint of the economics perspective, marginal cost is the additional cost incurred as a result of producing one additional unit of the company's products. For the purpose of cost estimation, we look at it from the angle of the accountant. So our marginal cost is the summation of all the variable costs. Next, what is contribution? Your contribution is sales value less total marginal cost. Your contribution is sales value less total marginal cost. Then profit is calculated as contribution less fixed cost. Let us go to the computation because the time is really running. Please, just 1 minute. . Just trying to put my device together here. In just 1 minute. Yes, Ogechi.
Sorry, sir. I actually missed that definition of marginal cost from the viewpoint of an economist. I did not see the recap of it.
From the accountant viewpoint,
No, from the
marginal cost is
economist.
the economics.
Yes, sir.
Marginal cost is the extra cost incurred, the additional cost incurred by producing one extra unit of the company's products. I'll take that again. Marginal cost, the additional cost incurred as a result of producing one additional unit of the company's products. I hope it's better now.
Yes, it is. Thank you, sir.
All right, let's go to this. Let me pick my pen. We are required to produce a statement of expected marginal cost, contribution, and profit. Let us start with the working first. If you look at this question, we are giving the levels in percentage. You have 80% level, Papa, 80%, 90%, and 100%. Your first working is convert the percentage to units. Olusoji, are you talking to us in this class? I'm trying to say that if you look at Apapa, you are giving the activity levels in unit, in percentage. You have 80%, 90%, 100%. And you are trying to work towards 75%. Your first working is determine the activity levels in units. How do we do this? Please look up. And please get your calculator closer to you and your writing material. Examiner say at 90%, the unit is 11,700 units. And I want to know the unit at 80%, at 100%, and at 75%. To do this, for 80%, it's going to be 80 over 90 multiplied by 11,700. Because at 90%, the unit is 11,700. If you want to get unit at 80%, you are going to pick 80 over 90 divided by, multiplied by 11,700. If you want to get units for 100, it becomes 100 over 90 multiplied by 11,700. If you want to get number of units at 75% level, it becomes 75 over 90 multiplied by 11,700. Please work this out. What is the unit here?
Yes.
The first one is 10,400.
All right, Joy, 10,400. Next. Olanrewaju, I can't hear anything from you.
13,000.
13,000. Next.
970.
750.
Thank you. You have gotten the number of units at the different percentage level. Working number 2. Test for cost behavior. Remember our explanation. For you to estimate the cost at future period, you must know the cost behavior. You are going to test for cost behavior. What does this mean? We want to ascertain if direct material cost is a variable cost, or a fixed cost, or a mixed cost. When you are done, you go to labor cost. Go and text. This labor cost, is it a variable cost, or a fixed cost, or a mixed cost? You are going to test for cost behavior for each of the cost items. Test for cost behavior for each of the cost item. You start with number 1, direct material cost item. The levels 80%, 90%, 100%. Volume in units. At 80%, the volume is 10,400 units. At 90%, the volume is 11,700. At 100%, the volume is 13,000 units. Now, go and pick the total direct material cost as given to you in the question. Please go to Apapa. Go and look at the data for Apapa. Give me the direct material cost. Put the question on your system, please.
72,800.
72,800 for 80%.
72,800. Next.
81,900.
81.
900.
Sorry, I didn't get that. Sorry.
81,900.
Oh, 900. Then lastly,
91,000.
91,000. You have picked the total material cost. Now, get material cost per unit, meaning divide the total material cost by the number of units produced. 72,800 divided by 10,400.
7 naira.
This is 7 naira per unit.
$81,900 divided by 11,700. 7
naira also. Oh, sorry. 7 naira also. The last one, what do we have?
7 naira.
7 naira.
Can you see it, please? We said for a cost to be variable cost, the cost must be constant per unit. Look at it. 7 naira per unit. When we produce 10,400, material cost per unit is 7 naira. When we move to 90% level, we produce 11,700. Material cost per unit is still 7 naira. When we produce 30,000 units, move to 100% level, material cost per unit is still 7 naira. We said for a cost to be variable, it must be constant at all levels. Linear relationship. In this case, this direct material cost is a variable cost. You are going to put a clause, note, or a comment, comment. Direct material cost per unit is constant at all levels. This is an indication that because of space, direct material cost is a variable cost. You have been able to test that direct material cost is a variable cost. When you are done with your text, move to direct labor cost item. You have the activity level on 80%, 90%, 100%. Volume in units, 10,400 units, 11,700 units, 13,000 units. Now go and pick your direct labor cost as given in the question in naira. What do you have?
62,400.
Okay. 52,000 what?
400.
62,400.
52,400. Next.
62.
Okay. 62, Abby.
Yes,
Yes.
sir.
$62,400. Next.
70,200.
70,200. Next.
78,000.
78,000. Now get labor cost per unit. Divide 62,400 by 10,400.
6
Naira.
Naira.
This is 6 naira per unit. 6
naira.
naira per
6
unit.
naira per unit. 6
6 naira
naira
per
per
unit.
unit.
6 naira.
What kind of cost is this?
a variable cost.
Variable cost.
As the production volume increases, labor cost per unit is constant. That shows that
Is a
labor cost is a variable cost. Hello. As the
Hello.
volume increases, the cost per unit is constant. That shows that cost is a variable cost. If you are trying to know variable cost per one will be the same at any level, at all levels, whether at the lowest level, highest level, cost per one will be constant. So you just put your notes here. Just put a note, comments. Comments. Direct labor cost is a variable cost. Then we move to production overhead cost item. You have the activity levels, 80%, 90%, 100%. Then pick your units, 10,400 units, 11,700 units, 13,000 units. Now, please go and supply the total production overhead cost.
59,200.
59,200.
63,100.
63,100.
And 67,000.
67,000. Now get overhead cost per unit. Divide the total overhead cost by number of units produced.
5.7.
Give me to 2 decimal places.
5 naira.
5.69.
5.69.
5.39. 5.39.
5.39. Next.
5.15.
5.15. Team, are you there? Look at this cost now. This cost is not constant per unit. This cost, look at it. As the volume increases, when we produce 10,400, total overhead was 59,200. Overhead cost per unit, 5.96. When we increase production to 11,700, total overhead increased to 63,100. Overhead cost per unit falls. And move to 100%. Total overhead cost 67,000. But production overhead cost per unit also fall. Please note, when volume of production increases and cost per unit falls, when volume of production increases and cost per unit falls, that cost is a mixed cost. I'm going to write this here. As production increases, production increase, production overhead cost per unit fall. This is an indication that production overhead is a piece. Please, can you mute? Who is this guy that is taking us on this class? If you want to talk, fine, but just mute your speaker. So once your volume is rising, is increasing, and your cost per unit is falling, that's an indication that that cost is a mixed cost. It contains elements of variable cost and fixed cost. In that case, you need to separate the variable overhead and the fixed overhead. This cost you have here, this 59,200, 63,100, 76,000, 76,000 is a mixed cost. It contains variable overhead costs and fixed overhead costs. We need to separate it into variable overhead and fixed overhead. To separate, you can use high and low method. To separate this cost, you can use the high and low method. Just come here, use high and low method, because we need to separate the cost to be able to estimate what the cost will be next period. Now put a clause using high and low method. You have high, low, you have your activity level, and you have your production. That is the cost we are trying to separate. Production overhead. The I represent highest activity level. Let's look at this. The highest activity level is 100%. And the volume of production was 13,000. The lowest is 10,400. Pick it. Come here. Pick the highest activity level, 13,000. With the corresponding cost, the cost here is 67,000. Let me put it here to save. Lowest level, 10,400. What is the overhead cost here? At low level.
59,200.
Thank you.
59,200.
59,200. Now look for the differences.
2,600.
Differences in activity level.
2,600.
2,600 units.
7,800.
Differences in overhead costs.
7,800.
800.
Yes.
This is your step 3 now. Calculate the variable Step 3 says calculate the variable overhead cost per unit. This is equal to differences in cost Check the formula we gave ourselves. Divided by differences in activity level. That will give you 78 divided by 2,600.
3 naira.
3 naira.
That gives us 3 naira. That is the variable rate per unit. 3 naira. Oh yeah. Then get your total variable overhead. You can get that either at the highest level or at the lowest level. At high level, total variable overhead is equal to, at high level, we are going to produce number of units, 13,000 units. Variable overhead cost per unit, 3 naira.
3 naira.
What do you have here?
39,000.
That means total variable overhead is 39. Out of this 67,000, total variable is 39,000. What is the total fix?
28,000.
Look at it. Total fixed overhead is equal to total cost. In this case, total overhead cost minus total variable cost. That will give us 28,000. You have separated all your costs. We now know the variable cost, we know the fixed cost. Remember I said an understanding of cost behavior is a prerequisite for cost estimation. When you are done, go and calculate your selling price per unit. Because we need to determine profits. That means there is need for selling price. Calculation of selling price per unit. We take the volume, 10,400 units, 11,700 units, 13,000 units. Now look at the question for Papa. What is the sales value?
208,000.
208,000.
234,000.
234. No, 234, not 243.
It's 234.
Sorry, oh my God. Okay. I need to bring up my. Okay. So 3,000, 4,000. The last one.
260,000.
Total sales value is 208,000. Volume is 10,400. What is the selling price per one?
20.
Then we are going to 208 divided by 10,400.
700. That is 20.
That's 20.
20
naira.
20 naira. How much here?
20 naira.
20 naira.
20 naira.
20 naira.
20 naira.
Yeah, that is 260,000, not 60,000.
Yes, is the system that is taking it off. When the electronic pen at time can fail. So you have gotten your figures now. Now let us produce the statement. A statement of profits can I minimize this so that really I have to do like this. I have to remove this. Let me see if I can shift it up. Is it complete? It remains to okay.
Sir,
Yes, sir.
sorry, sir. This you're working. I hope I will be able to print it out or something.
Who is speaking, please?
I'm Dean Femi.
Okay, you are just joining us. All
Yes,
students
sir.
will get it now.
Oh, okay.
Once
Okay.
you are on the group chat, then you are going to get it.
Okay, sir.
It's like physical class now. We do the working and we share.
Oh, okay, okay. Thank you. Is this the second class or the first class? Sorry, sir.
This is my second class. We started last week.
Oh, okay. Thank you, sir.
Just try and follow the class. You have not missed much, so don't be disturbed. Don't be disturbed. I've missed much. Oh. This is our second class. Now let's prepare the statement now. Okay. So we want to prepare statement of expected marginal cost contribution at the proposed level of 75%. At this level, unit is equal to 9,750 units. All right. Start with your sales value. The company is proposing to produce and sell 9,750 at the next financial period. What is the selling price per unit, please? At
20
factory,
naira.
multiply by 20 naira. Please get your sales value.
195,000.
195,000. Now go to variable cost. Remember, we have test for cost behavior. Direct material cost is a variable cost. In this case, come here. We are going to produce 9,750 units. What is direct material cost per unit?
7 naira.
Thank you, pick. Multiply.
68,250.
What do we have?
68,250.
68,250. Now come to direct labor. We are going to produce 9,750. What is labor cost per unit?
6 naira.
6 naira.
Let's multiply. Remember, variable cost is based
58,500.
on volume. What do we have
58,500.
here?
58,500.
58,500. Now go to variable overhead cost. For you to get your marginal cost, you are going to sum up all the variable costs. We are going to produce 9,750. What is variable overhead cost per unit?
3 naira.
Now get your total variable overhead now.
29,250.
We have picked all the variable costs in this question. We have picked all the variable costs. Now sum up. 68,250, 58,500, 29,250.
156,000.
That will give you 156. That is the expected marginal cost. If the company moves to 75% level of activity, the expected marginal cost is 156,000.
The contribution is 39,000.
Your contribution is sales value minus marginal cost. That will give
That's
you
39,000.
39,000. Then your profit. Your profit is contribution less fixed cost. That is the fixed overhead cost. How much?
28,000.
Then your profits.
11,000.
You are done with a Papa factory. You have produced the statements of expected marginal cost, contribution, and profits. We still have Ikeja. Any question, please? Any question, please? We have just like 10 minutes to round up this class. Obviously, we cannot finish Ikeja. If you start the question now, it's very obvious that we can't finish the question in 10 minutes.
That will we use this same period to solve for Ikeja?
Are you talking to this
Please,
class?
I have a question.
Please go ahead.
So you said that when we were testing for the total variable overhead cost using the high level, you said we can also test for it using the low level activity. Are we going to arrive at the same answer?
You can also use what?
When we're testing for the total variable overhead cost, that's your step 4 in separating the mixed cost. You said we can use using the high level. We can also use the low level. I'm asking, if we use the low level, are we going to arrive at the same answer as this high level of activity?
Of course, if you use the low level, you are going to get the same fixed cost. Fixed cost will be the same at all levels.
Okay.
If you go back to it now, Now get your calculator.
Okay.
Let us use low level. Pick 10,400. Multiply by 3 naira. Get total variable cost at low level. Total variable overhead at low level. What do you have?
31,200.
200.
That is the total variable overhead. Now,
Yeah.
to get your total fees, look at this. Look at this place, please.
Okay.
Total overhead is 59,200. You have got the
Yes.
total variable to 31,200. What is total fees?
28,000.
28,000.
It says the total fees cost will be the same at all levels.
Oh, okay. Thanks, sir.
All right. Obviously, we can't go beyond this. But I can encourage you. Let me show you one thing. Let me show it for 5 minutes. Now I will expect you to try and complete the question. Let me show you something. I can just pick I'll pick this aspect only. Okay. I want to see if I can start the question. Then let me see student completing it. Can come here. Okay. I'll just place it here. Okay, but that level is different. So, it can't work like that. I have plenty level, 80. Okay. Just 1 minute. Let me do for one. I want to show something here. I have 80, 90, 100, 105, 110. Let me if I can break it. Okay. I just want to show for one. Then I will explain one. Then you can continue. You can try to attempt it. The assignment I gave last week, only one student submitted. Remember, we treated corporate failure. I now said out of six company, we solved 3 company in the class, and I said you should go and attempt the 3 company on your own. Only one student was able to respond back to me.
We did the assignment. I didn't know that you said we should submit it. Actually did. Sorry, maybe I'll send it to you later.
Okay. Okay, I'll now do this is direct material cost item. We have 80%, 90%, 100%, 105, and 110%. This is the activity level. So we need to get the volume in units. Then we require the direct material cost. Then material cost per unit. Okay. Now, if you go to Ikeja factory, We are going to take the same process. You are giving, your first working will be get the activity level in percentage. Sorry, in units. You are giving in percentage. You have at 90%. Examiner says the unit is 8,100. We now have 80%, 100%, 105%. You also have 110 and
115.
You have 110, and the proposed level is 115. So get your activity level in units. For 80%, it becomes 80 over 90 multiplied by 8,100. For 100%, it becomes 100 over 90 multiplied by 8,100. For 105, it becomes 105 over 90 multiplied by 8,100. Please work this out. This should give you 7,200.
Yes.
How much here? 9,000. This should give you 9,450.
9,450. 9,900.
At 100%, you should have, at 110, you should have 110 over 90 multiplied by 8,100. That will give you 9,000. Then at the proposed level, 115 divided by 90, that will give you
10,350.
Now, go and test for cost behavior. This is 7,200, 8,100, 9,000 units, 9,450, 9,900. Now, please, can I have the material cost for Ikeja?
All right.
79,200 for 80%.
79,200.
89,100.
89,100.
99,000.
99,000.
102,825.
102.
825.
625.
825.
825.
106,650.
106,650. Please get material cost per unit.
11.
11 naira. Please always put naira. It's a cost.
11 naira.
11 naira. 11 naira.
10.8. That's 11 naira too.
10.88. 88.
10.77.
10.77. Now, if you look at this cost, if production is within 100%, the material cost per unit is constant. Is that not? Hello?
Yes.
If the production is within 100%, the material cost per unit is constant.
Yes.
Yes, sir.
But at above 100% capacity activity level, material cost per unit will fall. In this case, direct material cost is still a variable cost. But when production is above 100%, the cost per unit is falling. This may be as a result of quantity purchase discounts. Because the company is buying raw material above 100%, it's likely that the supplier is giving us some discounts. Where this happens, we need to determine what is direct material cost per unit. If the production is above 100%, we have gotten the material cost per unit. If the production is within 100%, you now try and determine what is the material cost per unit. If the production is above 100%. To do this, we are going to use high and low method. But the high and low method we look at after above 100%. Because it is when production is above 100% that you have your cost per unit falling. So in this case, look at this. Your comment will be when production is within 100% activity level, direct material cost per unit is constant at 11 naira. At above 100%, material cost per unit. Material cost per unit fall as production increases. In this case, it is necessary to use high/low method to calculate direct material cost per unit. Material cost per unit. If production is above 100%. If production is above 100%. So now do you high and low. I'll round up now. H low, activity level, material cost. Please note, you are looking at above 100%. Your highest level is 110. Your lowest level is 105. You are trying to look for material cost above 100%. So you are going to pick for your highest level 9,900. Your lowest level 9,450. Is 9,900 units, 9,450. Now, what is material cost at 9,900? That's 106,650. This is 106,650, Abby. Material cost here 102,825. 102,825. Look for the differences.
450.
This is 450. What do you have here?
3,825.
3,825. Now get material cost per unit.
8.5.
Differences per unit. Differences in cost. 3,825 divided by
450.
how much?
8.5 naira.
8.5 naira.
8 naira 50 kobo. What you are saying is that if the production is within 100%, material cost per unit is 11 naira. But if the production is above 100%, material cost per unit will be 8 naira 50 kobo. For this question, please, you don't need to estimate to look for fixed cost because there is no fixed cost. This cost is not a mixed cost. It is because activity is above 100%. That's why we have to estimate that cost after 100%. So you have two material costs for production within 100% and for outside 100%. All right, I'll stop here. Sorry, I've taken your 10 minutes. So my expectation is try to complete the question. Take an assignment. Try to complete Ikeja factory and send the solution to me. Now you are not going to go to direct labor cost item. Pick the unit, pick the cost, get direct labor cost per unit. Make your comment. You go to production overhead, do the same thing. You go to your sales, then produce the statement and share with me on or before Thursday or latest Friday. Yes. May God give us a better understanding. I will be checking out. Any question, please? Okay. Let's have a good night.
Good night, sir.
Thank
Thank
you very
you,
much,
sir.
sir. Thank you, sir.
Yeah, good night.